Hey there, savvy traders and future financial wizards. Welcome back to the channel where we demystify the markets and scout out compelling trade setups. Today, we're diving into a specific opportunity that recently lit up our scanners, an intriguing play in the biopharma space that's showing signs of a potential reversal. We're talking about Processor Pharmaceuticals Inc., ticker PCSA. But first, an important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Alright, let's get into it. Our focus today is Processor Pharmaceuticals Inc., trading under the ticker PCSA. This is a clinical stage biopharmaceutical company operating in the healthcare and biotechnology sector. With a market capitalization of $6.02 million, PCSA falls squarely into small cap, even penny stock territory, developing cancer therapy drugs by modifying existing FDA-approved oncology treatments. PCSA hit our radar because it triggered multiple powerful screening strategies simultaneously, indicating a confluence of bullish signals. First, it applied our Palomar SC strategy, a pre-breakout squeeze. This strategy looks for a low ADX or average directional index or trend strength indicator below 18, signaling a period of tight consolidation. Currently, PCSA is showing exactly this, with its price above the EM at 1 to the 20 period exponential moving average, a short-term trend indicator, and volume just beginning to expand. This setup often precedes a significant price move after a period of indecision. Next, dipped and top planar, or strength from the lows, was triggered. This strategy identifies stocks consolidating with low ADX, but crucially showing strength above the EM at 20. PCSA's Relative Strength Index, or RSI momentum oscillator, measuring price speed and changes above 50, indicating building buying momentum, and its today's volume of 94,553 shares is well above its 30-day average of 67,378 shares, confirming growing interest. Then POC delta, or point of control plus delta pressure, signaled. This means PCSA's price is currently trading above the highest volume price level of the last 20 days, suggesting buyers have gained control over recent high activity zones. Combined with 5-day buy pressure exceeding sell pressure, it points to aggressive accumulation. Finally, Ituzagi, the bear trap reversal, confirmed the setup. This strategy pinpoints stocks recovering from recent selling pressure, now trading back above the EM at 1 with strong volume confirmation, like we're seeing in PCSA today. This suggests that previous sellers might be caught offside, feeling a potential short squeeze. Technical analysis deep dive. This isn't just theory, the technicals are aligning. PCSA's signal was confirmed by the VWAP and EMA alignment gate. Its price is trading above its VWAP, the volume-weighted moving average, which provides a truer average price considering trading volume, signaling buyers are in control. The ADX, the average directional index, is above 18, indicating a nascent but forming trend, not just random noise. The RSI, or Relative Strength Index, is in the healthy momentum zone between 45 and 68, currently showing building strength without being overextended. Crucially, today's volume of 94,553 shares represents a relative volume of 1.4 times above its 30-day average, indicating significant renewed interest. Highlight volume. The surge in volume and price action today, up 7.93%, directly after a 12.12% drop over the last 30 days, suggests a potential reversal. Imagine a spring compressed tightly, ready to burst. That's PCSA under our Palomar SC pre-breakout squeeze strategy, setting the stage for a move. Then, visualize a heavyweight boxer picking himself up from the canvas, regaining his footing and throwing punches with renewed vigor. That's our dipped and top planar strategy, identifying PCSA building strength from its 52-week low of $1.67, now trading 33.1% above it. The POC delta tells us that the bulls are taking over the most contested price levels. And finally, the Ituzagi is the classic setup where sellers are trapped, fueling the reversal. So, what are the actionable levels for PCSA? Our scanner generated an entry signal price at $2.25. This entry is strategically placed after initial confirmation, aiming to capture the momentum shift. A tight stop-loss level is set at $2.2388, protecting against any immediate invalidation of the setup and managing risk effectively. For profit taking, we have tiered targets: T-Bone at $2.3625, TP2 at $2.4750, and TP3 at $2.5875. Highlight targets. Each target represents potential resistance zones where profit might be taken. This setup boasts an impressive risk/reward ratio of 1:10.4, meaning for every dollar risked, there's potential to gain over $10, a highly favorable asymmetrical trade. Again, remember, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Moving forward, keep a close eye on PCSA's volume. Continued above average volume would confirm buying interest and support further upward movement. Watch for price action to hold above the $2.25 entry and clear subsequent resistance levels, particularly towards depone. A break and sustained close below our stop loss of $2.2388, or a significant drop in volume on up moves, would invalidate this setup. Considering PCSA is still 84.4% below its 52-week high of $14.25, the potential upside from these low levels is substantial if this reversal holds. PCSA Pharmaceuticals Inc. PCSA presents a fascinating opportunity driven by strong technical signals across multiple confirmed strategies. With today's plus 7.93% move and plus 17.63% over the last 5 days, it's certainly showing life. While its small market cap and sub-$5 price point mean higher volatility, the confluence of technical indicators and the compelling 1:10.4 risk/reward ratio make it a noteworthy setup. If you found this analysis helpful, hit that like button, subscribe for more unique trade ideas, and let us know in the comments which stock you want us to dissect next. Happy trading!